Okay, good morning, guys. I'm really sorry for the mic issue. Yeah, let me switch back to my fundamentals. So, I would like to welcome everyone to another session of what 123 Technicals. And as usual, it's always nice to have you guys. For those that are new, basically 123 Technicals is an analysis session, the market outlook session. It's like this session where I show you guys what I'm seeing in the market. Do you understand? And then not just that, it also gives an insight on how I trade, on how I look at the market, on how I view the market. Do you get? So we always please, if your mic is not mute yourself. So yeah, as usual, I always start with fundamentals. Look at what fundamentals we have. It's always nice to have a perspective of what the fundamentals look like so you can trade with caution. You understand? So we already had two high impact news by 2 a.m. and then 7 a.m. on the GBP and then AUD. And then the next one we have is on CAD, which is CPI, Consumer Price Index. And basically CPI is another indicator of inflation. Do you get? So it's a very big thing investors and traders to take a look at. So you guys should actually watch out for that by 1:30, those of you that trade CAD. And then basically all the news we have apart from 1:30 p.m. are low impact news. So let's jump on the charts. Okay. I was saying that the most recent price action on AUD has not been encouraging. It has just been inside this range. This was basically yesterday. So those of you that know me very well, I hate trading ranges. So we've established on our 4H yesterday that on our 4-hour time frame that the market actually broke to the upside. You get, and then we're waiting for that with retracement and then with a continuation. But then we have just been consolidating here. So for now, there's nothing really to trade on AUD. I think when I'll trade is either when I see a break to the downside, then they retest for the continuation, or what's a break to the upside, and then a retest and what's a continuation. Sorry. But I think that's basically it. Right now, there's barely anything to trade. There's nothing to trade. The ranges are very ugly to trade. So now let's take a look at AUD. AUD is the same thing, basically. AUD is in that range. Yeah. Break, that's basically what I'll be looking at. Break either up or down, retest or continuation. Break to the top side, retest and continuation. Either ways, that's basically what I'm looking at. Sorry. That's basically what I'm looking at on both AUD and NZD. Now let's go to Euro USD. This is where it might get interesting. So all these moves we basically had an impulsive move to the upside. We did not react around these areas that we were hoping to see price reaction. But then this is where it gets tricky. And let me see what's the 4H is looking like. Are we seeing any massive rejections? No, this is basically looking like another retracement. It's not looking like a shift. Yeah. So let's check this out. So this is basically our range from here to here. Yep, and I like the fact that this demand area is actually inside the golden ratio. So this might be a place where price would like to react from. Let's see. This whole thing here, I hate the fact that they're just weeks here. I'm guessing this was in the night. Yeah, and then we had I don't like the fact that it doesn't have clear structure where I can say, okay, this was the point that structure broke. I can use this point here, this area here, but then we still have something. No, this one has already been broken and we tested. So this is actually the one we're supposed to be looking at now. We came like this, broke and then we tested, and then now we're coming down here. So this, okay, next I'll answer your question after this analysis. Yeah, before we go to the next part. So yeah, this was the last structure that was broken. But I feel this is not a shift in market structure. Maybe it's just that whole retracement on the 4H here. The retracement on the 4H to actually what's come down. Yeah, come down and then pick more orders to continue the uptrend. But if you want to go with the most recent market structure, you can be ambitious and catch that sell. If you see the retest there, we have a break. If you see the retest, you can catch the sell and write it down here. But anything if you're selling in this market, anywhere you're entering a sell, just make sure that your TP is at this point here. Anyway, if you're entering the sell here, fine. If you see any sign of a sell, let's say you see a retest, you can enter a sell here. If you see another, anywhere you see the entry, as far as you're taking a sell here, your TP should be around this area here, because price might react around here. So your TP should be around this area here. This is around the 1.04. Yeah, or you can just make it the 1.05 thousand, because that's basically a psychological area. Either way, it should be around this area, so you can mark it up on your charts. Your TP should be around this point because price might want to react here. So that's basically what I have on Euro USD. So someone asked in the chat section that how do I determine my Fibonacci range? So yeah, I'm just going to give a quick explanation to that. If you check most of the retracements that happen in the market, most of the retracements always fall. Price always retraces and stops inside this area here. 0.5 and 0.61. That's why most people call it the golden ratio. Do you understand? And most people, their strategy is actually built based on this golden ratio. Yeah, their strategy is built around it. Do you understand? So they are like for other people it's a strategy, but then for me it's like an added confirmation. Yeah, anytime I see structure inside the golden ratio area, I feel much more comfortable trading it. Do you get? But it's not. Let's say I have a range. I have this whole impulsive move, yeah, and then price is retracing, and then sorry, let's say we have an uptrend, yeah, and then I have this whole impulsive move. Let me drop this well. Okay, good. I have this whole impulsive move here, and then I drop my Fibonacci range, and then the golden ratio. This golden ratio is not inside, and maybe a break of structure, like the point where structure was broken, or maybe a supply zone or something. I'm not going to trade it. I cannot just see the golden ratio inside very candlesticks, or maybe something that is very empty on the left side and then want to trade it. Do you understand? I feel much more comfortable using it when I see things like demand or supply zones inside, or structure that was broken, or necklines. Just my points of interest. Do you get? I feel better trading them when I see my points of interest. Yeah, around the golden ratio. That's basically it. Esther, hope that explanation is okay for you.
No, sorry. Like what I was actually asking, what I really wanted to know was, how do you know where to put your, I think, the beginning of the Fibonacci and the end? I think, how do you know the points?
Okay. So basically, yeah, this is how I do it. Yeah, it's okay. Let me not use charts. Let me use this whole illustration here. Yeah, break retracement. Yeah, and then a break. Yeah. So now, if I'm using my most recent market structure, what I'm going to use here is the points, the higher low to the what? Higher high. At that point before the retracement was started. Do you understand? Do you get? So if it's in a downtrend, it's basically going to be the opposite. Yeah. It's going to be something like this. My fib is going to be from this lower high to the what? Lower low. That's basically it.
All right, thank you.
No worries. That's why if you look at it from this side here, that's why I picked here from this point here as my range, because this is actually a much more clear distance for me. Clear move for me, yeah. This whole point. If I'm going to analyze this as markets, like flowing with the market, yeah, basically higher high, higher low, higher high, higher low, higher high, and then that's the higher low, then the higher high. Do you get? So that's basically it. Anyways, let's take a look at GBP USD. Let's take a look at GBP USD. Okay, GBP USD gave us a clear break, clear break of structure. So GBP USD is actually giving us that kind of like shift. So it's not really a range, but then if you want to look at it one way, it's actually a range, and then we broke out of it, yeah. We've broken out of the range. So now what we should expect was a retest and then what a continuation. So just watch out for when price will come into this area here. Yeah, once price gets here, you can watch out, you can check for your entry criteria, and if you see it's fine. But I won't, GBP USD is not a pair I will advise anyone to actually enter aggressively. So always wait for confirmation on pairs like GBP USD. GBP USD has a high volatility, and then they're always fixed. Yeah, it's always prone to fix and all. But then if you still look at it critically, yeah, this is still inside this whole range, this 4-hour range. So it might just be another retracement. So let's look at it. Let's see where our 4-hour range is stopping so we can watch out and then use it as our TP anytime we take the trade. So this is basically where our golden ratio is on the 4-hour. So let's go to the 1 hour and see if there's anything important there. Okay, yeah, we had kind of like a small consolidation there before was the push. So if you are taking any sell, yeah, if you are taking any sell, even if you take the sell at this point here, let's say your TP is just maybe at the top of this range. Your stop loss, sorry. Your TP should be around the 50% of that. Your TP1 should be around the 50% of that 4-hour range. You can allow your TP2 and the rest to swing and go more, but your TP1 should be around this. Watch out for this 50% of the 4-hour range. Price might react from there. We don't know if it's going to reverse or not, but then it might react from there. You get. So I think there are other people that are actually waiting for price to get there for them to take it by. So I don't know. You guys should actually watch out for that place. So that's basically all my pairs. I've looked at all my pairs. You guys can, if you have any questions, what questions do you have? And then what pairs do you want me to take a look at? We still have like 12 minutes before the session. So any pair someone wants me to take a look at, and just drop it in the chat section or mute yourself and tell me the pair.
Yeah, have a good.
Okay, someone said good. Let's take a look at GJ first. Let's take a look at JPY first. Okay. Okay. This is really interesting. This is really interesting on GBP JPY. So this is our 4-hour range. Yeah, from here to here. Price is still within that range. Price has not reached the 50 yet. You get. And if you see, this is actually where the break is. So let's just highlight this area here. This is actually an important point on our 4-hour time frame. So let's go to the lower time frame and see. Yeah, we have sort of like a shift. We had a break, yeah, retest, break, and then we failed to. Okay, yeah, it's more of like another higher high, but then we failed. Another higher low, but then we failed to create a higher high, and we broke it to the downside, and then we kind of like retested, and then we broke that lower low again. So this is the point I'll be looking for a retest. I'll be watching out for a retest. That's if I want to take a sell. If I want to be ambitious and take a sell, you can take a sell here. Or for ICT traders, you guys love other blocks. So you can just pack this whole area here. And anytime price gets into it, you watch out and see if you see any of your entry criteria, then you can take the sell. If it's convincing that the sell is going to happen, then you can take the sell. But then your TP1, the 50% of this 4-hour range, because price might react from there. So that's basically what I have on GBP JPY. So someone said gold. Let's take a look at gold. Yeah. Really don't like gold. So we had a shift, now we're having another shift. Wow. Okay, good. So we had a shift yesterday. Okay, they said, how do you take or step up TP1 and 2? Do you reduce the opening lot size to run multiple trades? Okay, I'm the person that just asked the question in the chat section. Let me analyze gold, then I'll answer your question. So this is, if you look at the most recent market structure, we had a break of structure, which I said my sentiment or my bias on gold yesterday turned was very bullish. But then we had kind of like we failed to create another high, came down, created another high, retraced, and then we created another high. But then what we shifted, structure actually shifted. So my bias now has changed from bullish to bearish. So yeah, this is actually my range. Let's see, is there any place? Okay, this structure that was broken is actually inside the golden ratio. I'm not really going to say much about gold, but just watch out for price inside this area. Yeah, it might stop, it might reverse from there, it might not reverse from there. Just keep an open mind. Do you understand? But then the moment price breaks above this high here, then that's it's no more what's bearish sentiment. It's actually what's bullish sentiment. So those are the two things you should keep in mind. As long as price stays below this area here, below this point, we're bearish. Do you understand? Because this high here was facilitated the move that was broke structure to the downside. So keep in mind those two things. Price reaction around this area. If you don't see any reaction, then wait and see if price is going to break to the upside. So that's basically what I have on gold. So now someone asked a very interesting question. That's how do I take my TP or step up my TP1, TP2? So I have two ways, yeah. I can basically reduce the position. Do you get? The person asked if I reduce my position. So let's say I have a position that is running with 10 lot size, yeah. But once price reaches my TP1, I can reduce it to what? 5 lots. Do you understand? Or I can reduce it, I can just take 7 and leave maybe 3 lots to run. Do you understand? Or I can open multiple positions, and then once price reach my TP1, I'll close like maybe, let's say if I open 4 positions of two lot size, I'll close 3 of them and leave maybe 1 to run. Yeah, because I'll actually take most of the profits and leave just a few. Do you understand? Because anything that I'll actually want to have that confidence that anything that price does is not my business again. Do you understand? Now, there are advantages, yeah, and disadvantages to these two methods. The first method of actually what? Taking your profits from an existing, let's say open one position only, yeah, and then taking profits from just that one, yeah. The disadvantage there is that sometimes price will reach that your TP1, but then you not have the willpower to take that profit. Do you understand? It's not the same way of when you have your TP1 and TP2 set. Then price reaches there and then it closes automatically. I don't know if anyone has experienced this thing, but then price reaches your TP, but then you are like finding it hard to close the position. You're like, oh, I want to wait to have more profits before I close. And then before you know, boom, price goes back and takes you out maybe as break even or goes back to take you out as stop loss. Do you understand? So that's the disadvantage of that first method. That's why I prefer opening multiple positions. But then the problem of opening multiple positions now is the stress. Do you understand? Sometimes before you open multiple positions, price might move away from your entry. Do you understand? So you can just pick your poison and learn how to weaponize it. Do you understand? Honestly, I prefer both of them. I don't have anyone I prefer. There are some days I wake up and then I feel like just opening one position and then just be reducing the lots as price go on. And then there are days where I just open multiple positions and then set the TP accordingly. So price just maybe days that I'm not going to be active on the charts, I just set my TP and the rest. So good. Thank God. I'm glad the explanation has helped. Any other question or any pair someone who wants me to take a look at before we end the session? We have like 4 minutes remaining.
Please check JPP card.
Okay, GBP card. Okay, it's almost the same thing with all the GBPs. We basically have a break. We had this whole break, but then this is my range from here to here. But then the most important thing is what is price doing? The most recent market structure. Yeah. Price just broke this low here. Do you understand? So this is where I'll be watching out for price. Do you get? This is my point of interest. Do you understand? You can pack this whole area. Do you get? Because as long as price stays below it, we're bearish. Do you get? So you watch out for it and see if price gets there, fine. If you see any entry criteria, rejection candlesticks, shifts in market structure, whatever, yeah, you take the sell. Do you get? This one, I wouldn't worry about the 50% of this range because there's barely anything around the 50%. Do you get? If you drop the 50%, yeah, let's see, around the 50%, there's barely anything. ICT traders might shall argue with you that you have a fair value gap there. For those that trade ICT, you understand that this is actually a fair value gap. And the 50% of that Fibonacci is almost around, okay, it's actually the 0.61. It's almost around the 50% of that fair value gap. But this is basically ICT jargons. Do you understand? It's basically ICT trading. I don't do ICT trading, so I really don't rate it like that. It's not like it doesn't work for them, but then it's not my problem. Do you understand? So you guys can we might actually have that reaction around here. We might have something like this, yeah, and then they push to the upside to actually continue to the downside. We might have something like that. Either ways, these are areas you should take note of. Yeah. So that's basically what I have on. Hope you understand the analysis on GBP card. Hope I'm not confused with the whole ICT stuff.
Yes.
Okay, good. So if you're taking a sell here, yeah, let me make this whole stuff easier for you, yeah. If you're taking a sell from around here, let me do this. If you're taking a sell from around here, this area that I told you is my point of interest, yeah. If you take a sell here, if you see any convincing signs of a sell and you take a sell here, yeah, make sure that your TP1 is before it's at this low. Do you understand? The low that what started the retracement. Do you understand? Your TP1 should be there because that's the place that it's most likely that once price gets to, price will react from. Do you understand? Price can continue or price can reverse from there. So your TP1 should be around here. Do you understand?
Yes.
Okay, good. Is there any other? Okay, we have 1 minute left. So
Yes, please also check Euro AUD.
Euro AUD. Okay, basically Euro AUD. It's kind of tricky. Let's look at the 4H. It's not clear cut. Yeah. It's basically this downtrend. Yeah, this 4-hour downtrend. Yeah, we're basically in a downtrend. Now on the 4H, you can see that price is actually reacting from the golden ratio. If you drop, let's change this to filter so we can look at it. It's basically reacting around the golden ratio. Do you understand? These rejections are not above this 0.7. Do you get? It was a very deep retracement. Do you get? So now let's go down and see if we can fish out anything interesting. Now you guys can, if you look carefully here, you see how that range on AUD is actually affecting this thing. If you see here, we are in a very tiny range here. The thing did not last long, but then I think we've broken Yeah, we broke out, but it's not very clear. We broke out out of this range. Honestly, if you ask me this pair, I would like to sit out a while before trading it. Let's go to the 15 minutes and see if we can see anything. Okay, we can see that shift here. Break, retest, break, and then what? We broke it to the downside. So that retest is around here. That retest, and I think we have already, okay, we have not touched it. We have not touched it very well. Yes, let's drop our range on the 15 minutes. But honestly, this trade for me is very low probability. There's a chance it's going to happen. There's a chance it might not happen. It's more of like a 50-50 stuff. So you can watch out for, if you want to be ambitious and take the sell, you can take the sell, but your TP1 should be around here. Your TP1 should be around this area here. Because price might actually still be inside this range, inside this whole 1 hour range. Do you get? So at this juncture, I'd like to end the session. At the end of the session now. So hope this session helped. Hope this session has been helping you guys. Let me
Yeah.
see. So some people that have been day one, yeah. Ricky and Perry are always around. Hope this session has been helping you guys, and hope it's not just a waste of time.
Yeah, yes, it does.
Okay, cool.
Yes.
So I dropped that link yesterday so that you guys will join the other group. Yeah, the other group I created. I'm still going. So let me get the link and drop it. The other group I created for the session, because there are some how do I put it? Human bottlenecks I'm facing on the mastery group chats, which I will address with time. But in the meantime, I created another group so I can be sending the link there on Thursdays and Fridays. Do you get? On Mondays and Tuesdays, we don't have a problem. It's Thursdays and Fridays, but I'll sort out the issues with time. Let me get the link and send to you guys. Sorry. Okay, I'm dropping the link in the chat section. You can join the group. Yeah. And I'll be yeah, guys. Okay. Thanks to those that joined. Other you guys can join, or if you have not joined, you can just message me and I'll send you the link. Yeah. So I would like at this juncture, like I said, we'll be ending the session now. We'll come back here same time tomorrow, 8 a.m. And please, you guys should always keep an open mind with the market. This is something I always say. I'm sure most of you guys are tired of hearing me say it, but it's something that cannot be overemphasized when it comes to trading. It's a game of probability, so your mind has to be as clear as possible to actually flow with the market. So you guys should always keep an open mind. If an analysis doesn't go your way, don't worry, another one will come. Always be patient to take those high probability trades. Don't jump on a trade because you feel it's going to happen. Jump on it because it has given you confirmation that it's going to happen. Do you get? What's honestly trading from a peace of mind perspective is actually very sweet. Do you understand? Times where you trade and then have peace of mind. Trading is not a business that you would be saying, oh, let's say you take a trade and then you are panicking and saying, it might go my way, it might not go my way. No. In the long run, you end up having heart disease, things like high blood pressure and the rest. Do you understand? So it's good that you take trades from a calm perspective. Do you get? Honestly, I get the whole part of taking trades and then you're agitated. You're like, oh, it might not go my way, it might not go my way, it might go my way. So honestly, yeah, take your trades. First of all, identify your risk. Know what you are willing to lose. It's not just by risking an amount. Know that if I lose this, I am going to be fine. Do you understand? And I've accepted it. Do you get? And once you know your risk, take your trade. Take a high probability trade, not just any trade. Do you get? And once you take the trade, sit down and watch how it will play out. Do you get? If you don't have confidence yet in your strategies, practice on demo, or you can use what TradingView to what backtest. Do you understand? Over time, build confidence. It's when you build confidence that you can actually take trades and then have peace of mind. So that's basically what I have to say today. You guys should stay safe and have a very peaceful day. And just keep your mind open to learning new things. Forex is a never-ending learning game. So always be open to learning new things. It's your experience, that's learning over time that builds up to your experience and then your confidence. So you guys should take care of yourselves and then see you next time. And thank you very much for attending the session.